This is an overview of problem 2-1A. Marjorie, an architect, organized CNAS architects on January 1, 20Y4. During the month, the architects completed the following transactions. Issued common stock to Marjorie for exchange of $30,000, paid rent for office and workroom, $2,500, purchased used automobiles for $28,500, and they paid $6,000 in cash and the rest in a notes payable. Purchased office equipment, office and computer equipment for $8,000. Purchased supplies for $2,100. Paid cash for annual insurance policy, $3,600. Received cash from clients for plans delivered, $9,000. Paid cash for miscellaneous expenses, $2,600. Paid cash to creditors on account for $4,000. Paid installments due on notes payable for $1,875. Received invoice for blueprint services due in February, $5,500. Recorded fees earned on plans delivered. Payment will be received in February, $31,400. Paid salary of assistant, $6,000, and then paid gas, oil, and repairs for automobiles, $1,300. The purpose of this is to record the transactions directly following T accounts without journalizing. So we're not making journals, we're just putting all of this information into a T account. Cash, accounts receivable, supplies, prepaid insurance, automobiles, equipment, notes payable, accounts payable, common stock, professional fees, salary expenses, blueprint expense, rent expense, automobile expense, and miscellaneous. To the left of the amount entered on the T accounts, enter the appropriate identifying number for each transaction. So we're going to walk through these transactions one by one. I already made, the copy of this is in Moodle, so I already made T accounts for you in Moodle. So you can use, I also shared a Google Sheets, so you can use this or the Google Sheets. So let's talk about it. What's the very first thing that happened here? So I'm going to move down to the T accounts and I'm just going to read off a separate screen where it has the transactions. So the very first item listed is issued common stock to Marjorie in exchange for $30,000 cash. So this is problem one. And we received, the company in their books received $30,000 cash. And I'm just going to make all of these beautiful T accounts. All right. Do a little bit more here. Just going to format, get rid of that so it's not so big. And then I'll probably, all right. So we received $30,000 cash. So that's a debit to cash, which is positive. And then the credit is to common stock. So credit to common stock over here for Marjorie. And that's from number one. So, and this is transaction number one. So now we're going to read transaction number two. Paid January rent for office and workroom of $2,500. So they paid rent. The one thing I remember when I'm trying to figure out what happened here is the first thing I asked myself is, did it happen to cash? So we paid rent of $2,500. Yes, we actually used cash. So what happened to cash? Well, we spent cash. We paid $2,500. So that's a negative to cash, right? I'm just putting journal entry 2 here. We paid cash of $2,500, and the opposite side of that goes up, which is rent expense. So this is a positive to rent expense, negative to cash. So if you're confused on where do I go from here, right? Journal entry number 2. It's not really a journal entry. We're skipping the journal entry part, but it's number 2. All right. Now, we purchased an automobile for $28,500, paying $6,000 in cash, and the rest is a notes payable. So let's start with the positive side. Automobiles are assets, so we purchased it. So we're going to increase assets by $28,500 here. And now they said we paid $6,000 in cash, so that's a negative to cash, $6,000. And how do we know what we owe on notes payable? Well, the answer is notes payable would also be a credit, which it normally has a credit balance, and it would be whatever we had for the automobile minus the cash of $6,000. So we took out a notes payable of $22,500. I'm just gonna insert another little line here. Just gonna give us one more space here. And this is journal entry number 3. Journal entry number 3. All right, and so this was, just gonna add a little line here. Just adding lines so I can label these journal entries. Right, and this is journal entry number 3. I'm just labeling them so you can look back and see where this came from. All right, so moving on, we purchased office equipment, office and computer equipment on account for $8,000. So when it says on account, that means we didn't pay cash. So nothing happens to cash in this transaction. We purchased office equipment, so we're going to increase equipment, office and computer equipment, all in one category. We're going to increase that. And this is journal entry number 4, or transaction number 4. And then the opposite side of that, if we purchased it on account, that means accounts payable. So we're going to put that to the accounts payable from transaction number 4. Next, it says we paid cash for supplies of $2,100. Okay, so what happened to cash? Did cash go up or down? Well, we paid cash, so that's a negative to cash. And then we purchased supplies, so it's a positive to supplies. So increase supplies, negative to cash. And that's from transaction number 5. Moving right along. So it says we paid cash for annual insurance policies of $3,600. So first question, did anything happen to cash? Yes, cash, we paid cash of $3,600. So that's a negative to cash. Journal entry number 6. And then we paid it to insurance. So the way that prepaid insurance works is we prepay the annual amount, and then as the months go by, we just use the actual insurance. So we're first going to put this to prepaid insurance accounts because we paid the whole amount before the year even started. So this is journal entry number 6. Prepaid insurance is an asset, so it would have a normal debit balance. Next, it says we received cash from a client for plans delivered. So we're architects. Our whole service is delivering plans. So we received cash from a client. So that's a positive to cash, right? Received cash from client, $9,000. All right. And then this is number 7. And then the opposite side of this is fees earned. This is our revenue account. We received cash from a client for plans we delivered. So that's the opposite side of it. Professional fees is our revenue account. Next, it says we paid cash for miscellaneous expenses of $2,600. I'm going to have to add some more lines to cash here. So we paid cash for miscellaneous expenses of $2,600. So we spent cash, right? And then we have to add to the expense. So that's a debit to expense, which is a normal debit balance, $2,600. We paid cash to creditors on an account. So we're paying our accounts payable. So a creditor is our accounts payable. So we paid cash, which means it's a negative to cash, right? And we're paying off some of this $8,000 balance. We paid half of it. So we paid $4,000. So this normally has a credit balance. So to reduce it, we would make a debit to its T account, right? So paid installment due on notes payable. All right. So we paid cash again. Paid installment, $1,875. All right. So this is number 10. And then we paid on an installment. So that's a notes payable, $18.75. So this is number 10. So we know negative. That's why I'm saying one of the first things to see if you're doing what a debit or a credit, right, is ask yourself, did cash happen in this transaction? And did cash go up or down? If cash went up, it's a debit. If cash went down, it's a credit to cash. And then whatever account you're hitting next is the opposite of what you did to cash. So that can help solve a lot of journal entries or T account problems. Now it says we received an invoice for a blueprint service due in February. So nothing happened to cash. So, all right, so now we have a blueprint service that we owe. So this is blueprint expense. So that's $5,500 to the expense item. And then the opposites of that would be accounts payable because we're going to owe this later. $5,500 to accounts payable. This is journal entry number 11. This is number 11. All right. We recorded fees earned on plans delivered. Payment will be received in February. So basically, we delivered plans to clients, we invoiced them, but they haven't paid us yet. So nothing happened to cash. So we do know we've earned revenue. And a positive to revenue is $31,400. So this is number 12. And then the opposite side of this is accounts receivable. So we're going to book this to the accounts receivable. This is journal entry number 12. All right. And now we paid salaries of the assistant of $6,000. Is this cash? We're going to have to insert another line here. I'm going to move this up. So we paid cash of the assistant's salary of $6,000. So it's negative to cash. And then the opposite side of that would be salaries expense. So that's a debit or positive to salaries expense. And this is number 13. And our final transaction for this is we paid gas, oil, and repairs on automobile. So we paid that. So that's a negative to cash. All right. And then automobile expense is the opposite. So the positive to automobile expense of $1,300. So now we've covered all 14 transactions. The next step is to make balances. So we need to know. So I put these in order for you, and just so that you have a better idea. All of the assets would have a debit balance, right? All assets have a debit balance. So that means debits increase, credits decrease, right? So this would look like this, positive. Oh. So this would be a positive to it, and this would be a negative to it, right? So that means that what we're going to do to create a balance is we're going to add up. So I'm going to add up everything in this column. Those are all the positives. And then I'm going to subtract everything in this column. Those are all the negatives to cash. So that means we have a positive cash balance of $9,025 at the end of the month. Now, accounts receivable, nothing else happened, so we can just put the balance down there, right? Nothing else happened to supplies. Just move the balance right down to the bottom. Or prepaid insurance. Only one transaction, so we don't really need to do any adding or subtracting, right? All right, accounts payable. Now all the liabilities have a normal credit balance, which means credits add, they're positive, and debits subtract. So we're going to do the opposite over here. We're going to add up all of the credit side and then subtract all of the debit side here. So that means they had accounts payable, which means the positive of this, and subtract this, then add this, and they end with $9,500. Notes payable is the same as accounts payable. It's a liability. So we're going to add up all of this side, then subtract anything that happened on this side. And that's the balance for accounts. Notes payable. Common stock only has one transaction, but the formula would be the same as notes payable. Salary expense only has one transaction, but salary expenses, so expenses have a normal debit balance, which means debits increase, credits decrease. So we would have the balance over here. So, you know, do this. We would add all these up. They don't have more than one transaction, so I'm just bringing the balances down. Okay. And then professional fees is a revenue that has a normal credit balance. So we would add up everything that happened here and it would be a credit balance. So now we've gone through every account that we have on these T accounts and we have made balances. So it says calculate the balance, right? Then the final part of this problem says, well, 2 steps. Prepare an unadjusted trial balance for NOS architects. All right, so we're going to work on an unadjusted trial balance. So I'm going to put that right below these T accounts so you can see what's happening in these unadjusted trial balance, right? So NOS architects, unadjusted, I'm labeling it, unadjusted trial balance, January 31, 20Y4. All right, so I'm going to move these over. I'm going to center them. Beautiful. All right. So what you're going to do is you're going to label all. We're going to start with debit balance. So whatever the balance is on, whatever side, you're going to put it in this unadjusted trial balance. Credit balance. I'm going to make these bold. I'm going to put a little label. Don't worry about formatting like mine, right? Just want to make this look pretty. And then we're going to list all the accounts. We're going to center these. And these are all $signs with no change here. All right. So the first account we're going to start with is cash. I'm going to go up and I'm going to find the balance of cash, which is right here, $9,250, and it has a debit balance. So I'm going to put that there. The next account we have is accounts receivable. Right? So I'm going to go ahead and I'm going to find accounts receivable and I'm going to take the balance there. The next accounts we have is supplies. I'm going to go, which is a debit balance. So I'm going to start with all the assets. All right, supplies. Then we have prepaid insurance, which is an asset, right? And I'm going to take the balance from prepaid insurance. And then I have automobiles. And I'm just linking this in case we made a mistake and we need to fix a journal entry, then I'm just taking the balances directly from Excel. You'll be practicing this in the Cengage tool, so you won't need to link or do all of this work in Excel. But this is to help you practice as well. So, and then we have equipment, which is also an asset. So I'm going to go up here, I'm going to move a little over, and I'm going to find my equipment balance and hit enter. Now I have accounts payable. So these accounts payable is a credit balance. So I'm going to go over to the credit side of this and take the total in accounts payable. So 9,500. Then I have notes payable. And I'm going to take the total from notes payable. If you're working on this at home and you don't have Excel, you can write it down and take pictures of it and post it to Moodle. Then we have common stock, which is an equity account, right? And I'm going to take the total on common stock. Equity accounts also have a credit balance. Now we have professional fees, which is the other credit balance, which is revenue. So now we've finished assets, liabilities, and equity. Now we're going to move on to the income statement items. So professional fees, which was down here. And now we're going to list every expense. Salary expense, right? 6,000. Blueprint expense, which we have up here of 5,500. The next expense we have is rent expense. Automobiles expense, which is $1,300 miscellaneous expense. Miscellaneous expense, so I'm going to shorten that, which is $2,600. And that's all of our expenses. So then what we're going to do is we're going to total all of these columns. So an unadjusted trial balance, debits should equal credits. So I'm going to format because this is what it would look like. And so then we're going to add these up. And debits should equal credits. If our debits don't equal our credits, we've done something wrong in our T accounts. We've made it on the wrong side. But luckily, actually they don't. I think I probably made a typo. I did. So let's find the typo. I believe it's in rent expense. So rent expense, we paid $2,500 here. But when I put rent expense here, I typed it wrong. So $2,500. Look at that. I didn't make equal amounts on this side, and that's where I found it in the unadjusted trial balance. So now, since I linked it, it fixed my rent expense to $2,500, so I have $100,525. So it's easy to find in your unadjusted trial balance if you made a typo or you made a mistake. So I made one side opposite the other, and they didn't balance. All right, our final question of this problem says, determine what net income or loss was for January. So remember, we'll make an income statement. So it doesn't say make an income statement, income. So I'm just going to calculate it. So we would have professional fees, which is 40,400. And then we would have expenses. And I'm just going to copy all these expenses to save myself from typing. And then I'm going to copy all these numbers. And tell us. Take this from the unadjusted trial balance. And I'm going to add up total expenses. And then we have, wrong one. No border, top border. And then we have net income. And to get to net income, we subtract the total expenses, and our net income for January is $22,500. And this is it. So this is the completed problem 2-1A. I'm going to post the answer sheet in Moodle as well, and this is your in-class online assignment for the day. Work through it on your own. Don't just copy mine. And if you have any questions, please reach out. Thanks.